Introduction. Debt is often associated with financial burden and stress, but when used strategically, it can be a powerful tool for wealth creation. This article aims to provide insights into how one can leverage debt to build riches. However, it is important to note that debt comes with risks, and careful consideration and responsible financial management are crucial. The following strategies can help individuals navigate the world of debt and work towards achieving financial prosperity. Number 1. Education and skill development. Investing in education and skill development is a smart way to leverage debt. Obtaining a higher education degree or pursuing specialized training can lead to higher income potential and career growth. While student loans may be necessary, it's important to consider the return on investment (ROI) in terms of future earning potential. Conduct thorough research, choose marketable fields, and evaluate the affordability of loan options. Aim to strike a balance between borrowing for education and minimizing unnecessary debt. Number 2. Entrepreneurship and business ventures. Starting a business or investing in entrepreneurial ventures can be an effective way to accumulate wealth. Debt can be utilized to fund business operations, purchase assets, or expand into new markets. However, it is crucial to develop a comprehensive business plan, conduct market research, and ensure a sustainable revenue model before seeking debt financing. By carefully managing cash flows and leveraging debt strategically, entrepreneurs can accelerate growth and increase their chances of generating substantial wealth. Number 3. Real estate investment. Real estate has long been considered a reliable avenue for wealth creation. Investors can utilize debt in the form of mortgages to purchase income-generating properties such as rental homes, commercial buildings, or land. Positive cash flow from rental income can cover mortgage payments, while property appreciation over time can lead to substantial returns on investment. Conduct thorough research, consider market conditions, and evaluate potential risks before investing. Additionally, maintaining a good credit score can help secure favorable loan terms and interest rates. Number 4. Stock market and investment opportunities. Investing in the stock market and other investment opportunities can potentially generate substantial wealth. Margin accounts allow investors to borrow money from brokerage firms to purchase additional stocks or securities. However, investing on margin carries risks and requires a deep understanding of market dynamics. Extensive research, risk management strategies, and diversification are crucial when utilizing debt for investing. Consult with financial advisors or experts to gain knowledge and make informed investment decisions. Number 5. Debt consolidation and refinancing. Managing existing debt effectively can free up resources for wealth-building endeavors. Debt consolidation involves combining multiple debts into a single loan, often with a lower interest rate or extended repayment term. This can reduce monthly payments and simplify financial management. Refinancing existing debt, such as mortgages or student loans, allows borrowers to obtain better terms, lower interest rates, or adjust repayment schedules. By optimizing debt obligations, individuals can allocate freed-up resources towards wealth creation activities. Conclusion. Harnessing the power of debt to build wealth requires careful planning, risk assessment, and responsible financial management. Utilizing debt for education, entrepreneurship, real estate investment, stock market participation, and debt optimization strategies can provide opportunities for wealth creation. However, it is essential to exercise caution and consider potential risks associated with borrowing. Thorough research, seeking professional advice, and maintaining a disciplined approach are key to success. Remember, wealth creation takes time, and it is important to focus on long-term financial goals while managing debt responsibly. By adopting a proactive and informed approach, individuals can leverage debt as a stepping stone towards achieving financial prosperity and building lasting riches.